Get this, the term how to give back a car is trending on Google Trends. And look at the top 3 related queries. How to give a car back to bank, how to get out of a car loan, can you give a car back to the dealership? These are all breakouts and rising rapidly. People are underwater on their cars, meaning that they owe more than it's worth. So how did we get into this auto repo crisis? Well, millions of people are going to get their cars taken away this year for not making payments. And is it gonna get better or worse? I'm Brad, this is Ideal, and let's go. Okay, as you probably know, the US automotive industry is currently facing a significant repo crisis, characterized by an alarming rise in vehicle repossessions. This trend points to a deeper economic challenge and has wide-reaching implications for consumers, lenders, and the broader market. You see, the American auto industry, a cornerstone of the national economy, has long relied on consumer financing for vehicle purchases. Historically, this sector has witnessed cycles of boom and bust, but what we're seeing today is something that we've never seen before. See, a new car payment is the highest it's ever been at $729 on average, or a whopping 24.4% increase from 2022. And the average new vehicle price is a mind-numbing $50,000. While used car monthly payments are $528 on average at over 11% interest, which we'll get back to the interest in just a second. Now, a subprime borrower is someone that has a credit score between 501 and 600 out of 850. And these borrowers usually have impaired credit, hence why on average they're paying over 11% interest on the money loaned. And why is 11% interest bad? Well, on average, a subprime borrower is paying $40K on a new car and extending it 72 months. Over the course of the loan, their payment is $761 per month, and they will end up paying $60,000 total, or $20,000 in loan interest, taxes, and fees. Now, the issue is that the person that paid $40K at 11% a year ago, well, in 12 months, a new vehicle will lose roughly 20% of its value. So that vehicle is only worth $32,000 today, and they still owe over $50,000 on the car. This is the definition of being underwater on a loan. You owe more than the car is worth. It's not a good thing. And it all makes sense. I mean, after the loan payment, the gas, the insurance, you're looking at roughly $1,000 per month to own this car. So going back to the Google searches related to giving your car back to the dealership, well, it makes sense more people than ever are considering giving their vehicles up due to financial pressure, especially when 6.1% of subprime borrowers are at least 60 days or 2 payments past due on their auto loans, the highest since they started recording it in 1994. So what exactly does it mean to give your car back to a dealership voluntarily when you realize you can't afford the repayments anymore? Well, first you'll be responsible for the remaining loan balance. When you return the car, it's worth less than what you owe on the loan. You're still responsible for the difference. This is known as the deficiency balance. So the lender or dealer will sell the car, often at an auction, and the amount that they get selling for the car is applied to your loan balance. Now that deficiency balance, because if the sale doesn't cover the total amount you owe, the loan balance plus any fees associated with repossession and sale, you will owe the remaining amount. For example, if you owe $50,000 on the car loan and the car is sold for $30,000, you will still owe the lender $20,000. Plus, the credit impact, and this is big. Voluntary surrender is slightly better to your credit than a forced repossession, but it still has a significantly negative impact. It will be listed on your credit report and can affect your credit score and ability to borrow in the future. So negotiate with a lender, because before you voluntarily surrender, it's advisable to talk to a lender. They might offer options like refinancing or loan modifications to make payments more manageable. Now, a voluntary repossession is way better than a repossession after you default on your auto loan. And that's when a third-party agency with a tow truck come and take your car unannounced. Then the lender's gonna sell it to recover some of the money owed, and you're still gonna owe the deficiency balance. So if you're struggling with your payments and watching this video, well, reach out to your lender to discuss repayment options before you fall too far behind. Don't get your car repossessed. But unfortunately, over 1 million people will this year. And the largest demographic this is going to affect are younger buyers that are overextended themselves, specifically millennials and Gen Zers, who are way more likely to overextend themselves financially because they had less obligations, especially the ones that overpaid for higher end sports cars, which, if you didn't know, we have another channel dedicated to car enthusiasts, so go check out Ideal Media if you love cars. I'll link to it down below. Now, the $1 million repossession question. how did we get here? Well, let's rewind to 2020. And leading up to the repo crisis, the US economy grappled with various challenges, including the pandemic, inflation, and supply chain issues. Specifically, you'll remember the chip shortage, which elevated car prices to well above MSRP because there was little supply and a ton of pent-up demand. Creditors were willing to loan up to 150% of a loan-to-value ratio of a car, meaning if the MSRP was $50,000, they'd give a loan for up to $75,000 car, which is exactly what consumers had to do because dealerships were asking 50% over MSRP and more, and people were lining up to pay it. Then we got hit with high inflation, increasing the cost of essentials like housing, food, and healthcare, and leaving less income for discretionary spending. This has led to higher credit card debt and diminishing savings. In fact, Americans now owe a mind-numbing $1.08 trillion on their credit cards, which has caused consumers to spend down their savings and increasingly turn to credit cards to make up ends meet. And now with layoffs from Google, Amazon, and a ton of other companies, more and more people will be losing their jobs if they haven't already, and their income, which then they'll have to choose. Do they pay for food? Well, yeah, because you need it to survive. And their mortgage or rent? Well, yeah, because they don't want to be homeless. Car payments? That's one of the first things to go. And once that goes, how do you get to work? How do you shop for food? Yeah, that's why over 1.5 million people this year will have their car repossessed. They have to live, and their car isn't an absolutely necessary thing to live, which if you have your car repossessed, it's gonna affect your credit for years. And most of these people are already subprime candidates with mediocre credit. But you can't just blame the consumer. Yeah, they shouldn't have paid over MSRP for their car, but they kind of had to because that was the only way to get one. And they also shouldn't have taken out a loan with a higher interest rate, but again, well, banks, yeah, they know exactly what they're doing. Locking these subprime buyers into big loans makes them filthy rich because they know they make money on the interest when they loan money on the car. Then, if it's repossessed, they can sell the car again and lock a new person into a loan with a high interest rate. The cycle continues and continues. Plus, every person they repossess from, they're still on the hook for the difference from what the car that they sold it for and what their loan amount was. I mean, I've heard of a Nissan Altima being repossessed 9 times. Yes, that's 9 different loans from the bank. I mean, that turns a $20,000 car new into a $100,000 profit for the bank. Plus, dealers make money by getting a kickback from the bank when the buyer finances. So they push a buyer into a loan regardless of the interest rate because once they get approved, they make money as well. All this with the overall economic trends has led to bleak futures for people underwater in their cars. And just so you know, I don't want to scare you, but here are the top 9 repossessed cars and trucks. So hopefully you don't own one of them. And if you do, hopefully you're not underwater. So, what are your thoughts on the crisis? Are you feeling the burn, or did you pay cash for your car and are living the good life? Let us know down below. And if you're looking to start an ideal side hustle, check out this ideal vid up here or whatever YouTube recommends you watch next down here. I'm Brad, the Financial Cowboy. Let's get rich together and promise me one thing, keep living the ideal lifestyle.